morning. I want to welcome everybody to our inaugural video podcast and I'm going to call this the Credit Union Cowboy going forward, hence the hat, as you all know me. So today we are so fortunate to have Christy Robinson with Atlantis Wealth with us to kick off our inaugural video here. And we're going to talk about the importance of saving, when to get started, how to catch up, things like that. So let's jump right on in. And my friend Christy here, who has been a partner with Enbright Credit Union for a number of years now and has helped out, I can't tell you how many of our members with different types of savings plans and everything. But I think the biggest thing in the industry right now we see is financial health, and saving is a huge part of that. So my first question to you is going to be, when to start? When do we start saving?
I always tell people early is always better. As you can imagine, the thing is that I find with people is they think they have all the time in the world. We think we're going to live forever and we just want to enjoy right now and do the things we want to do today. And we just want to put off saving because we think we have that time. But really, you don't have that time that you think you do. And I have worked with all ages, all types of clients, young, old, and the standard answer I get from everybody is, I wish I had started early. We can always help you if you haven't, but it just makes life so much easier because you really never know what situation is going to arise in your future where you may need the money that you thought you didn't need. And opportunities, you may have a business opportunity down the road, and if you had saved all along, then you'll have that money in order to invest in that business opportunity. So it's just better to start that habit early on and start saving, and then you'll be glad that you did. And the other thing is, people think, well, if I save, then I'm not going to have money to do anything else. And that is not the case. It's just the way you channel the money and looking at your budget and figuring out what you actually can do. So.
Well, and Christy, that leads me into a question that I've seen, and to kind of pick your brain about it, is a lot of younger members are looking at experience. Case in point, my niece. She was saving for a house and just didn't like the interest rates, couldn't find what she wanted. So she took that savings and she wants the experiences now. She's traveling all over the place. I mean, she's been to, I'm going to say 5 or 6 countries in the last year where she's traveled to. But that savings part now is dwindling because of the travel. Are you seeing that same type of thing that we're experiencing personally, myself personally, with family, as well as other members of the credit union? And if so, what advice do you give people on that?
Well, I actually think since COVID happened, everything has changed for people and their priorities. They have come to realize that they want to spend more time with their family and they want to travel and have more experiences early on rather than waiting. And you never know how long you're going to live. So people want to do those things now. I'm a firm believer in that. I love to travel and go and do, and we started doing that early on. But the biggest thing I would say about anything is getting a financial plan built for you by a qualified advisor early on, just because that's going to help you get that clarity of what are your values. Meaning, most people don't know. They don't know what their values are, what they want their life to look like. So if you can work with an advisor that can help you figure that out, what you want to spend money on the most, if that is travel, for example, or, a vacation home or family or charities, helping you prioritize what that is, and then working with you on a budget to really get clarity on what your expenses are, fixed and discretionary, then we can aim for those other goals and get a plan to do that. But I do recommend, we do want to travel and do all those things, but I would say start for your retirement early, and it doesn't have to be a big chunk of money at the beginning. You'd be surprised. But again, figuring out when you want to retire, what that looks like, that lifestyle, and work your way back. We help people do that so that then they do have a lot more freedom than they think to spend on those other experiences that they want to do now.
That's great information, but it also leads me into another question now about, oh, I've got time. It's just like we started out our conversation here. I've got time to save. I've got time for my retirement. And I see so many people in the boomer age group, which I'm kind of right on that line there. Depends upon which chart you look at, whether I'm a boomer or not. But they're going to be a Walmart greeter or something else well into their 70s. So if they start later in life and they realize, hey, I really need to start saving for my retirement because I'm going to work till I'm 80 if I don't. What advice would you give someone that, hey, yeah, okay, you're in your 40s now. Let's start saving. Let's put it together. You can do some catch ups, things like that. But what would you tell someone who came to you and said, okay, I need to start saving for my retirement because I kind of messed up?
I find that age group, that is actually very common. People realize, okay, maybe I didn't start when I was 20 or 30. So I'm 40 now. What do I do if I want to retire at 55 or even 60? So it actually can be done in most cases. It depends on what kind of lifestyle they want in retirement. But again, it comes down to having that financial partner that can hold them accountable and get clear on what it is they want. What does it look like? What's the end goal? And then working our way back. And then really it comes down to the budget. Unfortunately, nobody likes a budget, right?
Exactly.
Because we think it's strict, but it's just figuring out what those fixed and discretionary expenses are, and then looking at maybe you had some obligations in the past that you don't have now. So you had a child in daycare, or you were paying for private, education or something like that, or you had a debt, unfortunately, that you were trying to handle. We sit down with people and help figure out what those were, and we just rechannel that money towards that retirement, for example. And then we maybe change the investment strategy to get more growth on that rather than what they were in. So there's a lot of creative ways you can do it. You just need somebody to help you get clear on that. It's kind of like when you have a coach with an athlete, right? They have the whole game plan before they go into the game. They don't wait to the Super Bowl or a big game and get there and go, oh, okay, let me think of what I want to do. They think way ahead, and then they create strategies of how we can reallocate, on the field or when it comes to money, their money to those different places to help them catch up. But there are ways to do it. You just need that person to help you get there and stay on track. And one thing I would add to that, a lot of people are scared to do a plan. I see that so many times, especially for women. We want that security, and we're just like, people say, well, I don't want to meet with a financial advisor because, I don't have enough money. I don't have enough money to save or invest. And they're just scared to see that end result. I'm so far behind. How can I possibly catch up? But that's not the case either. So it's better just to come and let us meet you where you are in your journey and then get you there. We've helped people in all different ages to get there and get on track. It's not too late is the bottom line.
And that's great advice. I think more and more people need to know that it's not too late. Start saving now and catch up. There's different ways you can catch up with IRAs, with other investments,
Yes.
Things like that. And you can catch up to that and get yourself in a comfortable position to where when you want to retire, you can retire without being a greeter or something like that.
Right.
And I get the fear factor too, because I see a lot of these commercials and they say, well, if you have $500,000 or more to invest, come see us. And it's like people are looking going, I got $30,000. What am I going to do? I don't have 500,000. That's $500,000. Mm-hmm. And so they get scared with that and they pull back and they don't want to talk about it. And then we also see with like our counselors here, they start talking about it, but it's like, yeah, I don't want to admit I dug myself into a hole and I don't see a way out. And I'm afraid to ask, I'm afraid to confront it. And we bring that out and try to talk to them and go, okay, look, here are the goals. And this is where, with your help, with my or Enbright's counselors' helps, things like that, that we can bring that information out and talk about it and get people on the right track to where, yeah, you're not working until you're 84 years old.
Yeah, that's exactly right. You don't have to work till you're 84. And that is my goal, to help people, retire as early as they can. Another thing I've seen, when we build the plans, you would be so surprised at what like 2% difference in growth over the long term does for people. So, I tell people all the time, all investments are definitely not equal. All money managers are not equal. And you need to make sure that you have those qualified people in place, that are independent and they look at your total picture, because that can make a massive difference in whether you get there or not. And sometimes we do have to be more aggressive for, if I meet a 50 or 45-year-old wanting to retire at 60 or 55, obviously we're going to have to change our strategy versus somebody that's 30 and they're starting then. And, I will say though, time is the biggest factor over the amount of money, even $100 a month or $50 a month starting out early for your 20-year-olds. That is, I cannot tell you the difference it makes. But if you haven't, it's okay. You don't need to be ashamed. It is what it is. That's my saying. It is what it is. So you just have to have somebody that can feel what you're feeling and respect that and help you get on track. And we've definitely been able to help those people do that.
Well, and that's the credit union motto. When you go back to where credit unions started, it's people helping people. Don't judge. We're going to look at where you are and give you direction, work with, people like yourself and get them on the right track to where, yes, you are going to be able to retire when you want to retire. So, that's all great advice. And I think people really need to know it's never too late to start. Like you said, you might have to be a little more aggressive with investments, with savings, with such to get where you want to be. But the bottom line, it's never too late. But then again, for the younger generation, again, I'm going to go back to what you said just a minute ago. Take that $50 a month, take that $100 a month, so you don't get the coffee as much or something, or what have you. But you're saving because, like you said, a lot of people don't understand compounding interest or investments.
Say, yeah.
And as that compounds itself, it builds on itself. You'd be surprised when you look at amortization schedules of putting $50 away and 10, 15, 20 years down the road, how much money you actually have sitting there.
I know.
And that's kind of where, it's only $50. It's a coffee, a couple of coffees a month, whatever. It's like, no, change your train of thought just a little bit and start working on it now. So, but all great advice.
Well, and people really, if they don't have a budget, it's kind of like any goal in life. If you don't track it, it doesn't get done, right? If you don't track what you're doing at the gym, how much water you're drinking, things like that, you just won't get to your goal. So budgeting is the same way. And what I find a lot of times when I get people to do that work, and I don't want to sound bad to do work, but it's just getting organized and figuring out what those numbers are, you'll be surprised at how many things you didn't even realize you were paying for that you didn't need. I'm like, are you really using that? No, I really don't use that. Well, let's do away with that and just move that over into the investments. And it's just simple things that can be done. It just takes an outsider looking in. Sometimes you can't see your own blind spot. I know I'm like that. So having that team that can help you see those blind spots and then get it priorities of what's most important. And I tell people, if you can set your saving and investing up early on or later, either one, like a bill, You know how you pay bills automatically online? You would be surprised if you just set that up to hit every month or twice a month a certain amount, you'll forget about it. You'll completely forget about it. It'll be just like a bill that's paid to your internet or whatever, phone or how you do those bills. Do the same thing with saving and investing. And then in a year, you'll be like, wow, I mean, that really grew. And then it just compounds, like you said, over time, and it just grows substantially. And that gives you satisfaction. So when people see that growth and they see their money building and they get clarity and they know they're spending money on the things that they want to spend money on that means the most to them, that's when you get motivated to do even more. But if you're just coasting along and you don't really know where you're going, you're just kind of going to work to go to work, or you're just putting money away, but you don't have anything you're striving for, you can't see it, it's just not clear, you're not passionate about it, then you're not probably going to, not going to do it.
It's not meaningful.
No.
It's not. And, you talk about that, and our financial counselors here use drafts for accounts. We'll set you up an account. We can let you name the account, and we automatically draft when your payroll comes in, $50, $100, what have you. Draft it over into that account. And I've had so many people that we've talked to look at that after a year or two, go, wow, I didn't miss that $100, and look how much money I've got sitting here.
Right.
It's like, okay, well, let's get you to invest that. Certificates, investments, what have you. Let's get you to invest that, because you can make more money. Especially, and I know I learned this, at a younger age, we can take more risk because we can recover from it.
Right.
I've been through, as well as you're a lot younger than me, but I've been through several recessions. I mean, I went through the housing crunch, everything else, and saw the bell curves go up and down and up and down, but still recover from all of that and come out on the other side of it much better off, because you took those risks. But you've got to let it sit and let everything work through itself. Don't panic. Like you said,
Right.
some people, they panic and everything, pull everything out at the bottom. And the other thing too I've told people is, don't try to time any markets. We're not that good. No. So it's just leave it alone. Let it do its job, and you'll be surprised at where you are every couple of years when you look at that, or every year. Don't pull back. Just let it sit and ride, because in 10 years, you're going to go, wow, I've got that much money, and it's working for me.
You'll be so glad you did.
Absolutely.
I think a lot of people get overwhelmed.
Yes.
Because they think, it's just a lot. I mean, money and investing is a lot. And they get overwhelmed about all these different goals, and they're like, well, how am I going to do that and that? So again, it's having that person to sit with you and get clear on it, and then put it in, I say kind of like buckets.
Yes.
You have buckets or phases that we strive for. So let's just do this one first and then move to this phase, and having a clear action plan where you can visually see, this is phase 1, 2, 3. This is when we're going to do those things. That's how you accomplish those things without getting overwhelmed.
I completely agree. So, well, Christy, thank you so much. It means the world to me to have you as our guest. I appreciate it. I love the conversation. Always love talking to you. So thank you so much. And, Enbright, we've got, like I said, we've partnered with Atlantis Wealth, with Christy. We have investments here. The things we don't do, Christy can do. But again, the biggest thing I got to tell everybody watching is it's never too late. Start saving and work through it, because you don't want to be working at 84 years old. So thank you, everybody. I appreciate it. It's been an honor to host today, and look for more from us coming from the Credit Union Cowboy in the future. Thank you, everybody.